Boom shakalaka, these charts are looking better than ever for Bitcoin, while we may still have a very volatile few months. Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we're taking a look at a lot of very interesting charts for Bitcoin and cryptocurrencies, including some very, very awesome looking Bitcoin charts, and why we may be in for a bit of short-term volatility. Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us on Twitter at @TheCryptoLove. Push that like button. Now, today, Fear 26, same as we were yesterday, pretty much same as we've been for the past few months. You know what else is going sideways? The overall market. However, today it went up 1% on average. Bitcoin at 17,449, Ethereum at 1334, BNB at 277, XRP 36 cents, Cardano 31 cents, Dogecoin 7 cents, and Polygon 86 cents. And if we take a look at Bitcoin, a few interesting things. So we just broke out of this dotted line wedge right here to the upside. We've broken above the 50 and 20-day moving averages. Both very good things. We actually broke through this first dotted pink line of resistance right here. We have a few other lines of resistance inside of a much larger wedge inside of a descending, falling wedge. Now, all of those things being said, Bitcoin has basically been trading sideways since the FTX collapse, with the top here around 18.4 and the bottom around 15.4. Anything between those levels is pretty much just going sideways, but we do have some critical levels coming up in the near future. First, we have the lows from back here in June. What was support here, we broke through with the FTX debacle, and now it could be resistance right now at about 17.6. We also have the 100-day moving average, about 17.9, and a few other areas of resistance, particularly this one around 18.4, could be multiple levels of resistance. Now, that being said, Bitcoin is on a bit of a tear. We actually have, when we're taking a look at the hike and the sheet candles, we have 10 in a row. The last time that this happened was when Bitcoin was on its way up to 25,000 from its lows of $17,000. So the last time we saw this happen with this many hike and a sheet candles green in a row, things were looking pretty good for Bitcoin. But let's take a look at the charts. You see, right now, equity puts are the new trend. Okay, so the equity put to call ratio is going up exponentially. Retail is betting on a big downside move in the market. The equity put to call ratio has been trending higher. It's at its highest level since 1998. Yikes. Max pain is towards the upside. Now, previous times when they have been this low, these were right before large rallies, especially after the 98 one right here. Nice large rally after that. Could be something very interesting where everybody is betting on the market going down, and it disappoints the most people possible. Bitcoin has just done something that is quite helpful. The 4 months of miners offloading large sums of Bitcoin seen here in red has finally come to an end. We see in green here the miners have finally stopped selling, maybe digging themselves out of a hole. So the sell pressure is weakened just a little bit, especially as the price continues to go up. But it's not over yet, because tension will build up towards the end of this month as we will encounter the short-term holder cost basis once again. You can see this right here, short-term holder cost basis, roughly somewhere between $18,000 and $20,000. Bitcoin will either break or reject, but some volatility will likely be back. You can see this combined with this, we have a lot of levels of potential resistance for Bitcoin in this area right here. If Bitcoin can break through there, it could be clear skies up above. Now, if we just take a look at Bitcoin, now most people take a look at Bitcoin, compare it with the halving. They take a look at Bitcoin, compare it with the all-time highs. They take a look at Bitcoin, comparing it with the all-time lows. Well, how about comparing Bitcoin with when the weekly RSI drops below 30, an indicator worth 1,000 words? You can see here, when Bitcoin price breaks below RSI 30 down here, that's the first one. And then it broke below 30 here. That's the second one. And then breaking below 30 once again, we can see here, we're not that far off. And basically, when it drops below 30, that is very, very close to the bottom. And things start to turn around and go parabolic up after that. So we may be on the verge of Bitcoin price heading upwards. It's click, copy, paste, whatever you want to do it, repeat for Bitcoin, just doing exactly what it did here in 2017, 2018, where we had a breakout of the RSI happening and a rejection off of the moving averages lines before eventually going back up. Well, we had breakout of the RSI already happening. We have rejection from the moving averages right here. Will we have the same thing happen with a nice rally afterwards? Does Bitcoin have some in the gas tank? That's a question that everyone is asking. Now, despite that, an interesting chart, the Meyer multiple. This is one that tells you when it's a good time to buy and a good time to sell. And now you may see what you want from this, but what I see is despite Bitcoin being its highest prices ever, pretty much, aside from the short period of time it was above $20,000, it's actually given us the best opportunity to buy Bitcoin at a discount. As you can see, these teal colors with the Meyer multiple under the 0.8 level. Well, we have the longest amount here in the past year, much longer than we saw in 2018, 2019, longer even than 2014, 2015. So if indeed the price does go back up and you start kicking yourself for not buying Bitcoin at a discount, look at how much of an opportunity you had to do so. Now, last time we had a Bitcoin bottom, it occurred almost precisely when we had a 50 and 150 day SMA death cross. Now everybody's like, oh, death cross is terrible. Actually, kind of a lagging indicator. Death cross is usually a good thing for Bitcoin. We just recently had a death cross printing. Happens when people are very bearish in the market. Again, people are very bearish in the market. The last cycle, Bitcoin found a bottom right after we had that death cross happening. And then we had a nice parabolic run-up. Well, we just had a death cross, potentially had a potential bottom, barring anything else from happening, could have a nice parabolic run-up following this. Where to and what would confirm it? Well, how about this chart right here? We can see Bitcoin's pump to the 50 fib, and the 50 fib right here is this white line right there. Again, in many different charts, the 50 fib, the white line. We can see Bitcoin in its parabolic trend has a bunch of cups within this trend, and the first historical data is presenting evidence that Bitcoin usually pumps back to the 50 fib. We can see each time previously, Bitcoin pumped back to the 50 fib. You can see it was resistance here, came back down before it broke through again. It was resistance here for a while before it broke through. And Bitcoin actually broke through at this time and then found support upon that 50 fib. Second, the pump comes fast and short. You can see how quickly Bitcoin price went from the lows here all the way up past the 50 fib. How quickly it went from the lows to the 50 fib. How quickly it went from the lows to the 50 fib. So it comes fast and short. And third, pumping to the 50 fib will be the most clear evidence that Bitcoin will not print another low. You can see that each time after it hit that 50 fib, it never printed another low. So where is this level for Bitcoin right now? You can see, if you can see this right here, Bitcoin $33,396. If Bitcoin gets to that level, then we will know for sure the bottom is in. So that's all for today's episode. If you enjoyed it, push that like button. I'll catch you guys later. Have a good one. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.